Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is a Thursday, and the market is kind of pulling back for some of the growth stocks because the Treasury yields have moved up nicely. So that's kind of a harbinger, possibly, of something that possibly is going to affect the market. As you probably know, when Treasury yields are low, like they've been practically forever, that tends to favor growth stocks, because growth stocks many times don't have any earnings. So when the Treasury yields are low, growth stocks tend to do very well. Now, when Treasury yields start to move up, as they've started to, growth stocks then have to be ever the much better at making money. So typically what will happen is growth stocks, it will not favor growth stocks as much as it's been. Now, as we know, many of the stocks in the QQQ trust have moved higher and higher and higher, and we may be getting to a situation where we see a correction. We're not there yet, but we may be close to a correction. So you just don't know on that at all. I'm going to kind of show you, but I do think we're seeing at least a change in the market. Here is a chart of the market today. It is currently in a confirmed uptrend, but it's down 2.16% when this slide was taken. The S&P 500 is off a little bit. As you can see, it's down about 1.8. The Dow Jones is down as well. The volume is up, so that just tend to show some conviction in the market, and that we may be pulling lower. As you could probably see on this little chart here, I don't know if you can see it, but this is the 50-day line. It looks like it's pulled below it. So that is something to consider. So we probably have to change our trading strategy a little bit. And in response to that, I had put out for everybody that's on the action trade alerts a play on Salesforce, which is symbol CRM, as a sort of a bear call spread as opposed to a bull put spread, which I did, which I've shown you how to do in the past. So this is what they call a bear call spread. And typically I start to move into these kind of trades around earnings, especially when there's a change in the market direction, as there seems to be, but you never can tell. So anyway, this is the most current chart of the NASDAQ composite. And as you can see, we're pulled down, and then we bounced a little bit off the 50-day line, but we're testing it again. Now, here's the thing about this. We have relatively low conviction because you can see the volume is sloping downwards. So we're kind of stuck a little bit in kind of first gear here. We tested back here in November, and now it looks like we're testing again. So the question is, what will happen during it? Who knows? Sometimes it may just go down and test and then move right back up, or it may be a longer slog. So we just don't really know. But right now, the indexes seem to indicate that we are possibly at not an inflection point, but at least somewhat of a change in the market. Also wanted to show you a chart on the QQQs, and this, of course, is the NASDAQ 100. This has the 100 largest stocks that are in what they call growth area. Typically, a growth stock is a stock that doesn't have earnings. It doesn't have dividends. It's and there are many really great stocks in that. It's not exclusive of that, because some of the big stocks like Microsoft and Amazon, they all have earnings, but typically they tend to favor the stocks that don't have any earnings, and it's basically everything is in to the price action. As you can see, we're down $11 on this to 313. There's a key level, and that's really about the 320 level, and we've fallen below that 320 level. That, of course, is where with my little pointer, I'm trying to show that's where the 40-day moving average is, right at this 320. So we've fallen below this key level, this key 320 level. Does that mean that, we're going to all of a sudden have a flash crash? I don't think so, because we're still in a confirmed uptrend. The general trend is still up, but we're getting to the point where we may see that move against us. As you can see, this RS line, this is this blue line here, it's pointed downwards, and that tends to kind of show the direction, generally speaking, in the market. Also, another thing that we have to look at very carefully on this to see if we're getting ready to possibly have a sell-off in the market is we look at the volume. And the volume, we have had two very large volume spikes, both to the downside. So that tends to indicate that we may be seeing a rotation in the market. I'm trying to put the small portfolio into things that are more cyclical and less growth oriented. Companies such as Rent-A-Center, I bought one position in that. That typically does well in times of rising interest rates, believe it or not. So I have that in there. Also, Mosaic, which is a fertilizer company, that tends to do well when there's price inflation on food. As a matter of fact, I just went to the store the other night and I tried to buy some orange juice concentrate, and it was $3 for a little, for a little can of it, and that means to me that we're going to see some price inflation in food. So that's another reason to possibly move to some of the cyclicals, such as that. So let's take a look at the next item here, and of course that is going to be that's going to be my holdings, and I want to show you what I've got long and short. So let's pull that up. There we go. And all right. So let's see if I can share that screen. Here we go. And basically, these are the stocks currently that I'm in. The volume's up at all these. I'm only up on Rent-A-Center. I'm down a little bit on Mosaic. I'm down on Ford. Ford moved past a key buy point. I may have been too early on this, as I said yesterday. The buy point on this one was about 12.14. It's since pulled back a little bit, just slightly, about 45 cents. I'll be in this one as long as it stays above a 7% stop loss. If it goes below that, I will be taken out. Also in the oil service company Halliburton, it's kind of even, but there is volume is moving up on that. Now I am short on Salesforce.com, but I'm short through a spread. I don't actually own the underlying stocks. I have a bear call spread of that. And by the way, I sent this out today on the Action Trade Alert. So that's something that you might want to take a look at. Anyways, in order to sign up for the Action Trade Alert, it's very easy to do. Just go to www.dallastradingfloor.com and first and last name, of course, and a good email address for you. Quit anytime. It's all free. And by the way, if you are looking on TikTok and you want to see all of these charts and everything, I'm simulcasting on YouTube at youtube.com/Dallas Trading Floor. And if you want to just move to that easily on the screen from TikTok, all you have to do is go to my profile, hit the link that says Beacons, and then you'll be able to see the current show and also one of the past shows, as well as sign up for the Action Trade Alerts. So thank you for that. Let's get to some of the questions for everyone up there today. So let's, I'm going to go ahead and get the charts up here, and then we'll get rolling on that. So, okay, so let's go there, and then I'm going to be all right. There we are up. We're now up with the screen. And I was just taking a look at RealPage. This is a company that may be breaking out. We don't know if this one is going to break out, but kind of an interesting play. on that. So let's get the first question. Thanks for holding on. Hey, Jim, love your channel. So thank you, man. Does it sound like of a big? No, I don't think this is a market crash. That's a good question. That's a very good question there. I don't think we're going to be seeing a market crash, but I do believe that we are going to be looking at possibly a pull down. Okay, I'm going to kind of show you the diamond. This is and I can show you just the chart action basically as of today. It's been moving up, but it started now to pull back to the 21-day line. And what happens typically when you see this is that you start to see a little bit of weakening. It pushed up yesterday and now it's starting to pull back. The relative strength is relatively low. We're not in a correction yet. We're not in a correction yet. A correction is a technical term that means that the stocks have moved down 10% or more since the last high. I do think, though, we are getting to a point where we're seeing essentially sort of a peak, and then we may be pulling back. But you cannot tell until the thing. It's so difficult to do this because when you look at the charts in hindsight, it's like totally 2020. You say, oh, it's so obvious. It's going to do that. But there are several indicators that I'm seeing. I'm seeing some of the key stocks that have been leaders, like Tesla, pulling back significantly, and I'm also seeing some of the more cyclical stocks, the kind of the boring stocks, doing well. And companies like RealPage is probably not. I mean, Rent-A-Center may not excite everyone, but that typically does well when the markets are pulling back, and those kind of stocks seem to be doing well. So yeah, that's a very, very good question. Thank you very much for that. So there we go. All right, this is a question from Gunter on would you still buy the SQQQ at 1510? Let's take a look at the SQQQ. Now, for everybody out there, the SQQQ is essentially a ETF which basically shorts the QQQ, which is the primary growth stock index that I like to use, ETF that I like to use. It takes the 100 top stocks in the NASDAQ 100. So let's kind of zoom in on that. Just kind of, I have to zoom in because some of these charts you can't see them that well. Okay, so here we go. So let's take a look at the SQQQ. As you can see, before, we had been seeing, we had been seeing before with the SQQQ. There we go. Let's pull it. Oh goodness, there we go. As we could see before, it had been coming right up to the 21-day line, and then it had been bouncing. It would bounce right off of that, but that's not the case this time. It looks as if it pulled. There we go. Come on, see if we can. sorry about the sizing on this. Sometimes I can't quite get it right. There we go. All right. So what's been happening here is that it's been moving and it's kind of been touching that 21-day line, and it's been okay. By the way, this has a downward trend on this, and the reason this does is because this is inverse to the market. The market typically has been trending up, but now what we're starting to see is some volume come in there and move above this very key line, this 40-day line. So I do believe we can still buy the SQQQ, and I do think that we have seen it kind of move above this line. I think that where you want to possibly start looking at it is above this line. So I think that really probably want to wait until we get maybe to about a $15 level on this in order to buy it. So that's how I would that's how I would approach this. I'm going to kind of put it back here to kind of where it is. Where I'd approach it is to see if we could buy it right above that line. So really, I think about $15 is going to be a very good place for that. So here's how I would possibly look at buying the SQQQ. Now, here's the thing about the SQQQ. It's extremely volatile, and the minute that you start to see it move, you start to see the market move up again, you want to just immediately close it. So this is sort of a very short-term trade, but basically where I think that would be a good place possibly to open a trade on this would be at about $15 plus 10 cents, or about, well, 15.10 on this. By the way, I do have a video on what a buy stop limit order is. Basically, what a buy stop limit order is as the stock goes higher, that's when you can possibly get into it at, what it do is activate the price. So I think about $15 is going to show a certain amount of commitment, and then of course you want to go you want to go about 10 cents higher than that. So let me kind of zero in again. Hopefully I get this right this time, so we can kind of see this. Yes, to see this chart pattern. Of course, it just boomed. It just moved out. Okay. Again, there we go. Let's go back to the charts. And in a second. Well, okay. Let's see if I can get some action on that. All right. All right. And go back to the charts. There we go. It seems like now we're sort of in there. Hopefully we can see it. There we go. Okay, so what I mean by possibly the $15 level, as you can see, it's going to be it's going to be right about at, oops, there we go. It's going to be right about at this level. If it moves above higher, then I think we can buy it. But set a buy stop limit order on the SQQQ for basically $15 plus 10, and then I think that might be a decent trade. But you're going to have to monitor it. It's very volatile. So, but I do think if we get a trade, and the reason the buy stop limit is because it's very hard to catch it, by sitting on the charts all day. It's better to do it with a buy stop limit, because that way, the machine basically is your personal assistant. So it's kind of cool. All right. Question. Where'd you set your stop loss on Ford? At about 1140 or lower. Okay. Well, that's a great question, Gunnar. Appreciate it. Let's see. I'm gonna just, it's funny. I put things in, and then I sort of I sometimes just move on from there. But let's take a quick look at that. And I will show you exactly where the stop loss was set at. So, okay. And what I do is I keep this thing called the small portfolio, and what this is, and you can have access to it easily. All you have to do is go to www Dallas Trading Floor, and it will give you access to it. So let me. Yeah, and basically here it is. I have my stop loss on Ford currently is at 1120. Is at 1120. and so that you can see that. It's at 1120 currently, and that's where the stop loss is. Here, I'm mostly in cash right now to be, to be this is my portfolio allocation on my small portfolio. I'm about 50% in cash, a little bit less than 50% in cash, basically with Rent-A-Center, Halliburton, Mosaic, and Ford. But my stop loss, and thank you for bringing this up, Gunter, for a good question, is at 1129. So that is, that's kind of where I'm at currently. That's where I'm at currently on that stop loss. Okay, let's go to the next question. Okay. Is it wise to sell stocks oh, absolutely. Oh, yes, absolutely, Sam. Absolutely. It is very wise to do that. The reason is because when you're when you're more than 7% down, it becomes increasingly difficult to regain your capital. And this is kind of an interesting thing. This is a kind of interesting thing that you have. Typically, as every year you're going to have some really big winners. For instance, last year one of my really big winners was Tesla. Now, I also had a very good winner on Nvidia as well. But those big winners are going to be interspersed with a lot of small losers. So here's the thing: if you're down more than 7%, it's just wise to cut your losses, because to come back from 7%, it becomes increasingly more difficult. The further you fall down, to come back from about a 7% loss, it only requires a little bit more than about 8 or 9%. Below, if it's an 8% loss, about 10%. And then you can see it's sort of a logarithmic. It's kind of a logarithmic thing. And so by the time you're down 15 or 20%, it's going to be extremely hard to ever come back on that stock. So you get to, at a 7 to 8% loss, you get to the law of diminishing returns. And what happens is that it becomes harder and harder to regain the capital that you have. So it's best to cut your losses at that point. So that's kind of where it's at there. Okay, let's. No one is talking about GameStop. Well, I'll talk about GameStop. Let's do GameStop. I'm not in GameStop. I'll be frank with you on that. Just because there may be another opportunity in GameStop, but I think if you got into this morning, you're probably down a little bit. Let's take a look at the stock. Let's take a look at the chart. I'm gonna zoom in again. Try to do that anyways. There we go. All right. There we go. All right. Okay, this is what GameStop is looking like right now, and as you can see, we had this blow off top about almost about 10 days ago or so. Then we came in, and now we're in a similar situation with the blow off top. But I want to point out something to you on this. It's true, it moved up almost to 200, but you can see it's pulled back to 111 right here. So in actuality, we had essentially another short squeeze. That's what caused this pattern. What happened was we had many people that were shorting the stock, basically borrowing the shares and then selling them and hoping to give back the cheaper shares at a later date. Well, what happens if the stock goes up just a little bit, if they're heavily shorted, is these people have what they call margin calls. And when the margin calls happen, they have to cover their short position with the shares of the stock. This is one of the reasons I like to do spreads instead of shorting directly, because it's a defined, you have a defined loss. Now, the problem with shorting just the underlying stock is there can be times when you have to cover that short and you cannot buy shares in the market. We see, okay. So interestingly enough, we just went after hours and the stock is going not so crazy. Okay. Very, very interesting. As you can see, it's moving up very, very quickly. So what I suspect is, it will open probably, it'll probably open lower. tomorrow. So let's kind of take a look to see if we can see that. Okay, this is the. Let's see if this is. I have to move my camera a little bit here. This is the 60-minute chart. Let's look at the 5-minute chart to see. We just went after hours. Okay, it moved down to 100 and then it bounced up. And of course, after hours, it's going not so crazy. It's already up 13% after hours on this one. Okay, here's what I would do on this one. It looks as if there, when it opens, there's a gap. So right at the beginning of the day. This is why you don't typically want to buy a stock like this when it opens. You want to wait. You want to wait for basically about 30 minutes or so, and it's going to pull back, and it's going to pull back, and then it bounced, and then it went up. Here's what you want to do, basically on a tactical basis. If tomorrow it gaps up just like it did today, if you buy it here. This is about 120. You want to immediately put in stop losses and then move them up. And so as the day progresses, you see, it will move higher. And then eventually you'll get to a place like this. It'll pull back, and then you will get a sell. But remember, on something like this, if you do decide to do this, and I don't necessarily recommend this either way, but if you do decide to do a GameStop play tomorrow, what you need to do is when you get in it, wait for about 30 minutes to see how it trades. Typically, it will trade up and then down, and then usually when it's making its move, that's when you want to get into it typically with a buy stop limit order, and then ride it up, and then just continuously move your stop loss up. And eventually you'll get sold out. But it's fairly high risk trade, very interesting trade that you can make some money on. But I wouldn't do it naked. I just think it's too high a risk right now. But it does look like we are getting, and I'm going to pull back to the daily chart here. It does look like we're getting another potential climax top. Now let's look and see what the short interest is on it. Yeah, it's less short interest than it was before, but about 35% of all the stocks, all the shares out there are short right now. So there may be a short covering, and that's when you get these climax tops. This is a short covering. That's what this is showing. But we do see some very strong, we do see some strong volume building here. So it does look like, we may be in a short squeeze here tomorrow. I don't know if tomorrow it would make sense that there would be a short squeeze tomorrow, because that would be Friday, and Friday is when the options expire. So let's kind of take a look at the options action on it. Yeah, it looks as if, let's see, this is going to be, we have calls. Okay. So at the 120 strike, they're saying, wow, $8.50 for the call. So the prediction is that so this is a relatively bullish prediction in terms of the calls. So I do think that we may see another blow off top here. Basically, this is a where the short covering is happening. If you do see that, the best way to play it is that if you buy it, then if you buy it, then start moving your stop loss up in order to cover your potential for a short covering. So that can be a good way to play it. So thank you for that very, very much for that. Okay, let's see. Interesting. Okay, why is the stock dark red like Google Maps? Okay. What that means, what the red on the, and I'm going to focus. Let's go over to Salesforce, which is symbol CRM, and they report tonight. So I want to see what the after hours is on that, but let's look at CRM really quickly to see how that traded. Okay, it's going to trade down. It's up a little bit after hours. Okay, so we may have a situation where it moves up hours. They haven't yet reported yet, but basically what it indicates, the red indicates selling activity and downward pressure, and the blue indicates buying and it moving up. So it looks like they had a very good report. So let me take a look to see kind of what Salesforce did, to see if I have to cover the short today. So let's see if it does give us that. Okay, this let's see if I can get a window there for Salesforce. Okay. All right. I can't really tell. Okay. Well, we don't know yet, but we will probably know very shortly in terms of what of what it turns out to be there. So let's go to the and. And so that's basically that. All right. So basically the red on a chart typically means that is a buying, that is selling pressure, that's selling, and a blue is buying. So there you go. Okay. Is GameStop going to go to 350? Maybe. If it does go to 350, you want to have your stop loss at about 345, because if it goes to 350, it will pull back, and it will pull back very, very hard. All right. Buy Coca-Cola right now. It's 50 right now, but it's going to go up more. How do you know that, Santa? I'm just saying. I'm not trying to be a negative Nelly, but how do you know that's true? Let's look at KO. And of course, this is a Warren Buffett special. He loves this, and this is the chart of Coca-Cola right now. Let's see, kind of to see. It's got a relative strength of 11. That's not very promising. Let's look at the weekly. Well, it does have, it's fallen. I don't. Let's look at the monthly. I don't necessarily think that might be the case, at least not in the short term. So what I'm going to do is I'm going to kind of zoom in on this and kind of look at this is a weekly action. Now it has formed a consolidation. That's interesting. This is Coca-Cola that we're looking at right now, by the way. Let's kind of see. It looks as if I think the trend is down on Coca-Cola right now. Now, this is a cup and this is potentially a handle. So at least in the short term, this is probably going to trend downwards. Now, this is a very interesting chart pattern. This is one of the best basing patterns. It's called a cup with handle. There it is. And basically the pivot is 54.62. Now, what does that mean? Well, what that means is currently we are below the pivot because after hours pricing was 50.25. So therefore, this is pulled back below. Now, if it was above the pivot, then I would say the potential of it moving higher would be higher. But right now, I think it's pulling back. So that's my take on Coca-Cola. Obviously it's not going to fall out of the sky, but I do believe that in the short term, we're probably going to see Coca-Cola move lower. All right. I'm trying to see a question from TikTok. All right. Hello from Dallas. Right on. Thank you, Ben. Let's see. Oh, a lot of people joined. Thank you. Jim, how long do you think GameStop will run? Great question on that. GameStop. I think GameStop probably is going to run up tomorrow morning, and then within about a day or two, it's going to pull back again. And the reason is because the action on GameStop is really dependent not on underlying fundamentals such as everybody's going to GameStop and buying Grand Theft Auto, but it's more on the fact that the shorts are getting squeezed in a classic short squeeze. And of course, that pattern is what they call a climax top. So I don't think you want to buy it for long term. GameStop is not not a long-term investment. It's going to push up probably tomorrow, but then after all the shorts are covered, then I think it's going to pull back, and I think it's going to pull back hard. So if you want to play it and you're in it, don't buy it in the first 30 minutes. Wait to see where it goes, and then if you buy it, because what will happen is in the first few minutes of trading, it will move up, and then it will pull back, and then when it starts to move back up again, that's potentially a place where you could get into it. Not going to be the easiest. And then as you get in it, immediately set your stop loss. And then as the stock goes higher, if it does, push that stop loss up, because eventually it will pull back. I can guarantee that. I can guarantee you. And when it does, then you'll be sold out at a nice profit. But GameStop isn't what you would call an investment. It's more a market play. So that's kind of the way it goes on that. All right. Thank you very much. Yes, I'll look at Coke. Yeah, absolutely look at Coke. I think it's going to pull back, to be honest with you. Oh, hey, thank you, man. Toronto. I love Toronto. Not in the winter, though. We got a little bit of your weather here in Dallas, and boy, was it cold. All right. At the end of the week. Okay, well, maybe it will. Yes, I'm waiting for the moon silver. Okay. Let's see. All right. So let's see if I can get another good question here. Here we go. Thank you, Byron. Also, it's a good time to start a position in the bank stocks with interest rates rising. I am looking at MS, Morgan Stanley, which is on my right hand. Thoughts? Wow, that's a great question, Byron. Yes, I do agree with you. I do agree with you. Interest rates and bank stocks kind of work together, because it's really a rising market where bank stocks typically do the very, very best. And this is a really good observation, Byron, because I will show you the chart now, and I think you're right on this. As you can see, it's moving up nicely. This is the weekly chart. Let's go to the daily to see. Yeah, look at that. Okay, very nice. It's pulled back a little bit today. There is a little bit of a resistance here at 77.76. That's sort of where the resistance is. And as you can see, today we did have a little bit of a selling action. There seems to be some resistance between about 77.76 and 80. That's where I'm looking at it. But this is a very nice trend. So it looks as if there's a nice channel forming here on Morgan Stanley. What do I think is going to happen? Well, here's what I think is going to happen. I do think it's going to pull back to this little, and I don't know if you can see it. I probably have to zoom in, but there's this little thing, the 10-day line. Let's see if it stays above that 10-day line. If this bounces off of the 10-day line, and that price for that would be, and let me just get that right in there and see if I can see it, would be about 76.50. I think that we're going to see Morgan Stanley pull back to about 76.50, and then probably it will bounce. It may not get quite down to 76.50. Now, as the stock moves higher, that's where you want to probably initiate your buy stop limit if you're interested in this stock. Let's kind of take a look to see what the checklist says. Well, the checklist is very good for a bank stock, 77%. The ownership, of course, a lot of people own this. A lot of funds own this one because it is such a central. It's a money center, very, very significant stock in the banking sector. 2712 funds own this one. That's very significant, and also the Fidelity Contra Fund is. This is a very interesting thing because Fidelity Contra Fund tends to be one of the very, very best stock pickers out there. So I love to swim along behind them. They're kind of a big whale, and I like to take a look and see what they're doing because that's a very good sign. That's a very good sign. Let's kind of take a look at the rankings of some of the money center banks to kind of take a look. Well, definitely Goldman Sachs has the highest rating in the sector at 78. Now, typically I like to buy above 80, but this sector has been beaten down for a while. So, and even though this is a more expensive stock, Goldman Sachs is, I think this one might be a better choice than Morgan Stanley MS, just because this one typically has. Let's see if I can zoom in a little bit on that. Yeah, there we go. Okay, we're zooming in on the weekly chart here. All right, and let me see. Yeah, okay. With interest rates rising, see, this was also one you might want to put on your radar a little bit here. And this is, of course, Goldman Sachs. And Goldman Sachs has been doing very well in their trading revenue. So they've been doing quite well as of late as well. But I think Morgan Stanley is also potentially a very good area to be. Let's take a look. And I want to look at a specialist. I kind of want to look at the rankings of some of the of some of the sectors of the economy. So what I'm going to do here is pull that up. So let me pull that chart up. I just kind of want to see where the capital is flowing in the economy, and in order to do that, sometimes it's good to have a special list. Let's see if I can get that list up here. That's in the industry groups. All right, let's see if we can see that. Okay, let's look at the industry groups performances rated to everything else. So let me kind of put this out of the way. There we go. I'm a little bit, you can see me now on that. There we go. All right, so let's kind of look at, which areas of the market tend to have the best ranking. And I'm gonna sort these from best to worst. Okay, so let's see where the money is moving in the market currently. And I don't know if you can, let's see if we can zoom in a little bit. There we go. Hopefully this will let me zoom in a little bit on this. Okay, so I don't know if you could see this. There we go. So what I'm going to do here is I'm going to sort this by the strength. Okay, so here's what's happening in the market as it stands now. The top group, believe it or not, is energy, other, then retail stores. They've been so beaten down that we're starting to see some bounce back in the retail store sector. Retail, wholesale jewelry, consumer products, consumer electronics. Now, this is what's very interesting is we're starting to see movement, and this is one of the things we should also look at, is we're seeing some movement into mining, oil and gas, as you can see. So this is where the capital is flowing in the market. Also, some of the banking obviously is going to be it's going to be good, but let's see if we can move down there a little bit. Let's see if I can. There we go. So further down, of course, we're seeing some action in the some of the finance, but basically right now the movement in the market has been to some of these cyclicals like the oil and gas. So that's something that we might want to also potentially look for value there. But in terms of the financial stocks, I think Morgan Stanley is excellent, but I also think you should look at Goldman Sachs. It's a little bit stronger than Morgan Stanley. So that's something that we'd like to see. Okay, let's take a look. Oh, interesting. Okay, nope, long term. Okay, so check AON. Thank you, Santa. Check AON, which is Anon, which is basically the let's see if I can get Anon up here. Let's take a quick look. And Anon, which is sometimes it takes me a little bit of time to resize the windows here. So that's what I'm doing. Hopefully it'll kick over some more. There we go. 400%. Wow. It's taking a while to pull in on that. And this is going to be for Anon, AON. Sorry for this. There we go. AON. What I'm doing behind the scenes here, less, probably less good than, is I'm adjusting the size so we can see it on the screen. There we go. All right. Interesting. It's basically flat after hours, and of course this is a very sizable insurance company, one of the biggest in the world, of course European based, and it seems to be relatively flat, relative strength of 37. You know what? I would probably avoid this one. I know that they are a leader in insurance, but I think right now when the market starts to move lower, and I do think we're going to see that, insurance claims typically go up. So I don't like insurance companies in a falling market. I like them in a rising market because everybody's buying insurance when they have cash flow. The first thing to get cut back are the insurance premiums when the cash flow gets tight. So I don't typically like insurance companies in downward motions. So I would probably avoid this one. But let's take a look at the checklist. Yeah, it's a 55 checklist. This is not really good enough for me. I typically like to see at least 60 on my checklist. So it's really not that stellar. We do have rising numbers of funds that are in it. That's a good thing. But the industry, in terms of the industry and sector, the rank is 173 out of 197. So that is not a good ranking. We want to be in the top. Here's the thing. The capital sloshes around in the market, and there's 197 different sectors of the economy. And what happens is we want to kind of go where the whales are going. We want to see where the money is moving into the sectors. Now, right now, it's moving into the more cyclical stocks. For instance, that's one of the reasons why I hold Halliburton and Mosaic. Mosaic is a fertilizer company, which typically does well in inflationary periods. We haven't had a lot of inflation. I'm old enough to remember very, very high inflation during the 70s. And I think we may be, with all this money that's been pumped into the economy, we're eventually going to start to see it. And it's going to start to happen in things like in things like food prices. It's already starting to happen. That's why one of the top areas right now for stocks is consumer products, because everybody has to go to the grocery store, even if the prices are going up. So I do think that that's going to be an issue. So Anon, I wouldn't recommend it during a downturn, but what I would recommend are some of the oil stocks potentially, and I'm going to be doing some deep dive on that as well, and hopefully get everybody sort of some information on that. And by the way, I do put these out from time to time on the Action Trade Alerts. So if you're interested in that and signing up for the Action Trade Alerts, it's really easy. All you have to do is subscribe you can do it on YouTube, but the best way is for the free Action Trade Alerts is basically to go to www.Dallas Trading Floor and then just sign up. And of course, it's all free. Also, if you're on TikTok, thanks for watching me, by the way, on TikTok. I am simulcasting this on YouTube, so you can see all the charts and all the that I do there. But you can also sign up for the Action Trade Alerts. It's super easy to do. Just go to my profile and then hit the link, and then it'll take you to a little page, and you just need first and last name and an email address, and we'll get you on that list. And of course, it's free. And I always remember that. I always mention this because, you know, in in the investing business, everybody says, "Yeah, I'll give you the secret, but you got to pay me, a lot of money per month." And I don't believe in that. At least not now. Maybe I can be convinced differently, but I try to put out as much on how I'm trading as I can, because I definitely, along the way, when I started out, I got a lot of help from a lot of people. So maybe I can help some other people, and that's the kind of idea. So that is available on the subscription to the Action Trade Alerts. All right, so now after that little commercial, let's move back to. Hey, Deb, how do you research your stocks? Well, very, very good question. I typically use a number of sources, and you know what? You don't have to have a subscription to news services like I do. I happen to have some professional news services, but you can do a lot of this research on Yahoo Finance, and it's totally free. So that's a great way to go. I'm typically looking, so Yahoo Finance is a very, very good source. Another one, there is a site called NASDAQ.com, and it's the site for NASDAQ. That's also very good, especially when you're dealing with options. They have some very good option chain information. And again, it's totally free. So you don't have to have a paid service. Now, I do use some paid software only because it makes my it just shortcuts a lot of things. Also, a really good charting software, and I probably should be getting a referral for this, is TradeView. And that's free too. So there's a lot of good stuff out there. There's a lot of resources on the web. You just got to look around. But Yahoo Finance, believe it or not, is excellent. It's really, really good. And you can do a lot of stuff. Okay, let's take a look at Apple. Thank you, Fernanda. Appreciate the question, because, as I was in Apple, I love Apple. I try to use Apple equipment. So sometimes some more success than not, but Apple is just, it's in one of those funks, and stocks just can't continue to go up all the time. It's sort of like, it just can't, you just can't do that. So let's kind of take a quick look at the there we go. The trend in Apple has just been down. It's just been down, and we're just seeing a lot of sell-off. By the way, Warren Buffett, who was, everybody knows who he is. He sold a lot of his Apple positions. So it's just, I don't think it's, possibly going the way we want to see it. Now, one thing that is kind of heartening here is that we do see, at least on the sell side, we do see some declining volume. And that's this little line here. So we do see a little bit, but it's still, there's a lot of selling going on. I think that we probably are not going to get support at the 40-day line. I think the next time that we can really buy it is going to be here at the 200-day line. Now, sometimes, this is why I kind of know that I believe that we're in for a pullback, is because when the market is in a confirmed uptrend and things are kind of moving higher, then stocks tend to bounce at the 40-day line. But that's not the case, because a lot of great stocks aren't bouncing there. So the next place that they can bounce is at the 200-day line. So right now, it's just not time. The thing to do with Apple right now is, if you're not in it, if you're down more than 7%, and this can be very painful, you need to sell it and wait for it to reverse, because it will reverse. But if you're not in it, this is a classic stock you want to watch list, because if you watch list Apple, you will get a payoff, because eventually it's going to come down to the it's going to come down to this 200-day line, and then probably it's going to bounce off the 200-day line. Now, it hasn't bounced off the 200-day line in quite a while. Let me see if I can. There we go. Let's go to the monthly chart. I want to kind of show you the history of Apple. And well, that doesn't really allow us to see it. Let's go to the weekly chart. Yeah, there we go. Okay. As you can see, the last time it basically bottomed onto the 200-day was way back here in, and as you can see, there was a volume spike back in March of 2020. This is right at the beginning of the COVID downturn, was right here, okay? And so what happened was, with Apple, it bottomed, and you can see that it moved through this black line here. I believe that's sort of what's going to happen here. I do think we're going to see a bounce off of this 200-day line, maybe go below it. So if it pulls below this 200-day line and it reverses, then I think we might have a good buy. But that won't be until we get below, until we kind of get below. Let's see. Let me zoom out here a little bit. Sometimes it won't let me see. By the way, that's an alert that I have set. We got a track price. Oh, I'm having a little bit of bandwidth issues. That's why there's this delay. But basically, I don't think we should consider buying it until it's back down to about 113. Apple's about down to about 113. It's got a little bit of ways to go there. It seems to be kind of stuck about 121, in that range. But I think that we're going to have to wait on Apple basically for it to go back to the kind of number that we need to see it. So I do think it's really buyable. Let it pull back to about 113, and then when it reverses, that's when you want to buy it. So that's waiting games are tough, but that's kind of the deal. What is the stock of the day? Well, I think the stock of the day is RealPage. No, I'm sorry, not RealPage. Pardon me. I think the stock of the day is GameStop, but I'm not going to buy. I'm not going to buy it. It's a little bit too big a deal. I'm probably not going to do anything with. I'm probably not going to do anything with GameStop just because it's a little bit risky to do that. So, but I appreciate that comment. Let's see, Michael. Let's see. What do you think of Microsoft puts tomorrow? Could it possibly export? Well, I'm not a fan of doing naked puts, but I mean, you could definitely make money doing it. So let's kind of look at the daily chart, and I'm going to zoom in. So could it break resistance? Boy, that's a good question, and that's a very good catch there, by the way, Michael. Yeah, it possibly could. If it breaks below this line here, it possibly could. We possibly could see it break. We possibly could see it break resistance. We've got some very, very high selling activity going on. So yeah, that's actually not necessarily a bad trade. That's not a bad trade because if it were to pull below this line here, then I think, yeah, I mean, it definitely looks like it possibly will, but it looks, it's really hard to say. A daily pattern is tough. Let's kind of pull over here to the weekly to see if, and I'm going to zoom in a little bit. There we go. 200%. Okay. It looks as if we are seeing it. Yeah. I think that could be a very good candidate. It could be a very good candidate for a pullback. We have a consolidation on it, so 232. So yeah, I think you could do that. I mean, if you could get a little bit further out, maybe that's where you want to go. You need to give yourself time for it to be right, but it does look like it's a pullback to the 40-day line. Now, here's the thing with Microsoft. Microsoft is very, very heavily traded, and it tends to respect a lot of these trend lines to a great extent because many of the people that are trading in are programmatic traders, and so they tend to respect that. So I don't think that sounds like a pretty decent trade there, Michael. I think that on closer look, I think yeah. Just be careful. Don't make sure that if it starts to go against you, you have an out because it can take longer, unfortunately. But I think that's really good. Great question. When you talk about moving averages, do you use simple, weighted, or exponential? Very good question. I use them all. What do I mean? On the simple, with the simple moving average, the 10-day line, I use that as that's a non-weighted average. The 21-day line, that's typically the green on my charts. That is the 21-day exponential. So that's the only one that I use as exponential. And then I also use the 40-day line and the 200-day line. The 200-day line is also a simple as well. So very, very good question. I typically don't use weighted averages because then that basically what will happen is that will smooth the lines a little bit. Some people do use that. I think that's good. I typically do. I analyze the weighted basically, and I haven't shown you that chart. Basically using the NASDAQ composite to see how far away from the standard deviation it is, and that's what I use essentially for my signal on that. And I'll show you that probably tomorrow. I don't have it up, but a very, very good question. So I basically use one exponential average, and that's the 21-day exponential, and then all of the rest are simple weighted. So, wow, great question. Thanks for putting it out there. A few weeks ago, you said Mr. Watch Space upcoming earnings, ending episodes. Okay, great, boy. Thanks for reminding me. Thanks for reminding. Let's see if we can possibly make some money. That's the game of the game, right? Is to make some money. So let's look at space, and earnings are coming up on that SPCE. So let's look at space. All right, what I'm going to do is I'm going to zoom out here a little bit. Yeah. So this is a chart of space, and as soon as I get enough throughput, I'm going to show it to you. There we go. All right, this is a chart of space, and basically we are coming into earnings tonight. So it's due tonight. So probably it's too late to enter this. I wish I had. I wish I had done this one because very interesting, very easy to predict this movement. You notice how it's down $4.39. Well, that would have made a great bear call spread, which I didn't do. Great bear call spread. But do you notice? This is one of the reasons I love to trade spreads so much. And I'm going to probably, now that the market's slowing down a little bit on things like Tesla, I'm kind of switching over to more of these earning strategies. But space has a history of pulling back on earnings. As you can see, it pulled back there, it pulled back there, it pulled back there. It didn't pull back there. Interestingly enough, it went up to the last one. So 5 out of 6 of the last ones, it's pulled back, and it's definitely pulled back this time. So, boy, I need to eat my own dog food. Hopefully I'm back now with my camera. I'm sorry about this. Sometimes I have been having issues with the bandwidth here, but hopefully we're going to get that straightened out. I talked to the building manager about this. Well, I've wasted another hour of your time, but I do appreciate you looking. And if you want to possibly get on the action trailer, it's very easy to do. You just subscribe to the Action Trade Alerts by going to www.Dallas Trading Floor. So until tomorrow at around 2:30, if I get started on time, because sometimes I was a little late today, I'll be back. And I just very much appreciate all your questions. Some of them are just great. And one last question: do you think Snap will continue down past the 6120-ish price level? Let's look to see. Snap, SNAP. Snap. Well, it's recovered a little bit already, it looks like. Okay. Yeah. We're seeing some topping action here. Let me show you that chart. Yeah, Michael, unfortunately, it looks as if we're going to be, and we're talking about Snap, right? Yeah, Snap. It looks as if I've seen some topping action here. There was this bar here. We're looking at the daily chart. We topped up here, then we've fallen below the 10-day line. Now, hopefully, if it can hold the 10-day line, then I would say, we're continuing an uptrend. But it looks to me like it's losing the ability to hold the 10-day line. It looks like we're at close to a reversal level on this one. And so I think that we may see a downtrend tomorrow on this based on this chart, because we've had 2 down days in a row. We've pulled below the 10-day line. We're still above the 21-day line. There was a test of the 21-day line. That's this blue here. That's a test, called a test. So, and we do have, well, okay, so there, yeah, I do think that right now it looks as if we're just about ready to start changing direction. This looks like a top to me, but again, I've been wrong so many times I can't even count them. But it does look like we're changing direction. It looks like this is a change of direction from its high, basically up here, which we basically had 2 days ago. So it's a high of about 72. It looks like it's pulling back, and let's just kind of look at the smell test here. 88% is still really good. Ownership is nice in it, but you know what? There is just a disincentive right now for many of the growth stocks. So because of the rising interest rates. So I think that looking at that chart, I would think that we're possibly at the very beginning of a pullback. Where is it going to pull back to? Well, I think that it may pull back, and this may shock you. It may pull back to about 48. That's what I'm seeing. Anyways, I think that there's a very good chance that Snap may pull as low as 48. It's looking on this chart. So, thanks again, everybody, for watching. Tell your friends about it, and tell your friends about us. And I will see you back tomorrow at 2:30. Happy trading.